Okay, I'm checking the sound here. Can you guys let me know you're hearing me all right? Just getting ready to key it up. Welcome everyone. We're about to get started here. Just doing a quick sound check here. Awesome. Hey folks, thanks for joining today. There's quite a bit to cover. The craziness in this country just continues on. I don't know where this ends, um, but it's continuing. We can thank the LA County for disrupting the market yesterday. That was good of them to exercise their power over the people. Um, I think it's, I'm not a health official or anything like that. I don't know what the right thing is to do. I just feel like these politicians are exercising some crazy power over people. So I'm not sure um, what all is going on there. But I mentioned in my comments over the last several days that what we what we're seeing on in the markets is they got really starting to feel real normal a couple of days ago. I mentioned that I was kind of an eerie feeling that all of a sudden things are starting to stabilize and feel normal. Watch out for some volatility. It was literally that day uh, in the last 2 hours of trading yesterday when some of this news started to break and market participants just, traders just started freaking out and selling. I haven't seen that type of selling for a number of weeks. It's been pretty stable, but it was very aggressive selling. Sometime in the future, we're going to do maybe some more educational type broadcast. Right now, I'm still going to stick with the format we've been doing over the past several weeks now since we started doing these live casts. And what we're really looking at here is trying to do a number of things that go a little more in depth in the markets. And let's see here. Yeah, I've got my volume all the way up here, so hopefully that'll help. I saw a couple comments there, but you know, w- w- hang on one second, folks. Give me just a second, folks. I'm trying to adjust this sound. I'm hearing that it's a little quiet, so without having to scream. So just bear with me just one second. I want to try one thing here. Okay, so we're just going to go ahead so I can get some momentum go. I had one of my associates call me just to tell me it was really quiet. Anyway, um, so much for the politicians, so much for the disruption we're seeing. We're seeing futures down 1.6 right now, and I think what we're likely to continue to see is some downward pressure for a number of days. So let me just kick off by talking a little bit about the fundamentals that are going on in the markets. I don't get a lot of chance to talk about, but we all know unemployment came out last week at 14.7. The real number is probably 2023, and that the effects of that are going to be devastating. I realize that most of them are temporary, but the numbers that I'm starting to see out of some reasonably reliable sources, whatever those are anymore, is that around 30 to 40% of these jobs that are being lost aren't going to come back. So let's say 30 million people are out of work. That's 10 million people that are going to be dislocated. I've talked a lot about over the past month and a half or so about dislocation of capital, uh, businesses failing. All this stuff is still going to happen. And and I get that the Fed is backstopping everything, but that doesn't take away the pain of the people. And then when you get crazy, y- you know, listen, we've got to get the economy. I'm in the camp that we've got to get the economy open. And if we can do social distancing, we can do masks, we can do all that stuff. That's fine, but we can't keep this thing shut down because it's just going to be catastrophic, and there's going to be extremely long-term damage that happens. If you just look back to 2008 and 9, it took the better part, some things still haven't recovered since then. The number of people that got moved around in that crisis, it took, 3 to 5 years just to get some normalcy. The mortgage market, for example, had maybe it was probably 3 to 5 years before it started to act normal again. And that was after Freddie and Fannie were basically nationalized, and they were buying every mortgage. And, so the whole mortgage business got completely disrupted. And I do want to revisit, I did a podcast. If you look back at some of the videos that I did, see a podcast I did with my brother. He's a institutional mortgage financier on multifamily, and he brought in some really interesting things. And we've been obviously talking over the past several weeks and want to do an update. But some of the things that we're seeing there is that these multifamily is so far so good. It depends on the type of housing that's out there. So we're still monitoring that. The banking system, well, obviously not going to make any money if the Fed's going to keep interest rates at zero. There's some issues there that to continue to watch. But probably the biggest thing that we're going to have to keep an eye on is what happens with this LA County thing, how many other states or different folks that are going to keep the economy shut even longer. I'm a little concerned about more protests and ultimately the people taking things into their own hands. You can take that for what it's worth, but start to see, some crazy, potentially violence and people just getting tired of everything having their life on hold. And it's getting more difficult, I feel, just from things I see on Twitter and things of that sort. So the thing that so we're going to have to watch that. That's where some of this nervousness is going to come into the markets. All that kind of stuff. You probably notice I have the E-mini futures trading. This is my trading screen that I use, and just have that up there for your eye candy and entertainment while I'm talking about some of this setup of what's going on in these markets. We'll dig into the technicals here in just a second, but I think just one more comment on the Fed. I saw some things in the timeline that were discussing things going on with the Fed and things of that sort, and some folks have commented on some of the comments on the line that there has been maybe I'm forgetting that the Fed's, when I talk about declines in the market, that I'm forgetting the Fed's backstopped everything. And the question came up. I saw it on timeline. I'll just try to address the Fed all at once here, and then we'll move on to technicals. But the Fed's got a lot of power. They've had a lot of liquidity. I think it was last week, one of the videos I discussed the float, the currency float went from around 2.3 to 4.5 trillion. So they've liquefied the entire float that's in the system. They've literally doubled plus that. And so there's liquidity is definitely there. Liquidity doesn't make people work. Liquidity doesn't make economies work. And liquidity doesn't produce earnings. Activity in the economy does most of those things. And obviously there's some winners out of this thing already. We know just from watching how the Nasdaq's traded and those type of things. But on the Fed, listen, these guys don't want to see zero rates, and they definitely don't want to see negative rates. Negative rates are not a good thing. We fell in the European situation. It looked like I discussed, I believe it was 2 videos ago, 2 commentaries ago, that it looked like the 10-year started to move up and wanted to go higher. Well, yesterday's action late in the day, there was a big bid, and flights of safety came flying in, and that happened. So let's go in and let's go ahead and start digging into some of the technicals here. Let's take a look at let's start with the futures here. Futures have broken through their 10 and 21. 2 videos ago, I talked about this upward slope in the 10 and 21, but that's all over. I've been talking about the slope in these PPMs, and I'll try to unpack a little bit because a lot of folks have been asking about the PPMs. There is a video on the timeline that I did to explain them. I'm going to do more of that later. But this has been my concern, and I talked about this last night. I just want to go a little more in depth. Every time the market made a peak, each time we got more divergence, and I've been talking about these downsloping PPMs here, and that's been a real concern because these first 2 are the primary trends. The PPM 1 is at a minus 4.6, which anything below 0.25 is a trend, and what that tells us that on that moving average, which is 2863, that there's less than, at 0.46, there's less than a 30% probability for the market to close above that moving average when you have a 0.46 number. That's basically, it's a percent, so it's almost 0.5% per day. When you get to that level, the probabilities of the markets actually moving above and closing above those levels diminish as that rate of change or that angle of attack gets steeper, whether it's up or down. And so this was during this period here when this 10-period moving average is going up, we had a 1.5%. 0.25 is way over here. So we've been this is roughly 0.25. This is where this thing has been for a while. And with this volatility we saw with this when the rally came, we saw this huge volatility increase, and then it literally peaked out. And this is not unusual to happen. It peaked out early in that cycle, and then but this became very concerning, especially these last couple highs that we had. And we've got the 200-day moving average here. I'm going to bring up a Fibonacci grid just to go through that again on what the possibilities are. But right now, the most significant thing, I talked about this in last night's video, is that this indicator down below tracks the percent change and first and second derivatives of this green line, which is the 40-period moving average, 2701. Right now at a 0.30, there's only a 40% probability that we could close below that. Now it is started to decrease, so if we get below 0.15, then that's going to tell us that it is penetratable and that there's a possibility of the markets going down below there. So let's put a Fibonacci grid on here real quick and see what we can come up with. So I discuss this in videos and just want to put this out there while we're all hanging out. We got about 330 people online right now. Is that what I do on this daily commentary is just that it's daily. I try to cover what I think is going to happen for the next day. Sometimes during the week, I'll focus really on the minutia. Sometimes events will happen that will trigger larger events on a weekly or monthly, but most of the time I'm covering exactly what I think is likely to happen within a range. And there's something I'm going to start. I'm going to show you in a minute when I go through this. And it used to be I did written commentary literally since 1986. I've been writing daily commentary. And I stopped writing it when the markets got crazy and started going to the YouTube videos. And that's how I met all of you. I mean, I think we're pushing 5,000 subscribers. I think this channel will continue to grow, and especially when we start putting some other elements out in the market as far as other types of content. But the daily commentary is to cover what is going on a day-to-day basis, what the expectations are. And I'm going to put one more thing on the screen here just so you can see this. And these are all proprietary indicators that we have. So I'm going to put on here what's called the rangefinder. You might be able to see it depending on what kind of device you're watching, but I'm going to put in a data map here. And these are daily numbers. I'm trying to figure out how to get these to display over in this pop-up box I just put on the screen. You'll see that the ranges for it. What this does is every day it predicts the range of what the bar for today is likely to be, the high lows. And it's got R1 to RXT, which is the extreme. So each one of these are important. So today we had, it really traded between R1 and R2. And on the downside, we're looking at 28.17, 27.98, and then extreme was 27.81. So these numbers a lot of times are pretty accurate. I'm going to go over to the cash market here for just a minute because I want you to see this setup. These numbers are very accurate on the cash market from that standpoint. I picked the wrong tool. 1 second here. So when we look at this on the cash level, you'll see that the patterns are typically much more accurate. The low today, we went through the extreme 28.21. So when that happens, typically when we go through the extreme of the day, we'll see a bounce in the market, but it will bounce back to potentially to the moving averages, which are 28.50. So kind of a dead cat bounce at best. But these patterns in the PPMs are very similar to what is in the what's going on in the futures. The futures have been a really pretty good precursor, get a good feel for how the cash is going to open and how it's going to trade the next day. But but these patterns are all the same. Once again, this PPM, we're only at a 0.26 now on the PPM3. This is the bottom indicator, which that thing is starting to wane. Like I said, 0.15 and below, that what it will tell us is that the S&P can decline below this level. So let's take a look at let me just draw. So this has been the pattern we've been discussing on the daily channel every day. I had this counted as a 5. This still could be an ABC. I've reversed it, thought we were in a wave 5 here. If that's the case, then we had a 5th wave failure. But everything is, this 29, this is the cash now, 29.80. The interesting thing is that's happening here is that the 200-day moving average is now declining. It's rolled over. So that's part of the issue with not getting above that level. And when everybody had these crazy expectations, it was just going to be a V. Market was going to go straight up forever. You knew that was going to be pretty rough. The other thing that I do have on the that I'm going to show you, and I talked about in the last couple of videos, is our short-term database. We monitor 16,500 plus symbols, and we look at trends in all of them. That database on a short-term basis got to plus bullish 76%. Whenever it gets in that level, then we're pretty frothy, and that thing's going to have to pull back quite a bit. It's still at 74%. I'll show that to you here in just a minute. Let's look at the weeklies, and then I'm going to go, the plan is for me to go through the S&P, and then I'm going to go through and we're actually going to do Bitcoin. That was a big request by some folks. I got emails and other requests on Bitcoin, and we'll also talk about gold at the same time. And then we'll hit some individual stocks. We're going to take a look at these airlines, some of the group of airlines, what they're looking like. A lot of folks have been talking about that, and so. The thing that, and then we'll hit on Tesla. If you don't hear me mention Tesla when we get later in the stream, then remind me. But I want to hit that. That's a stock that a lot of folks are watching, and you know, Elon Musk. What can you say about that guy, right? So let's take a look at the daily pattern. I'm sorry, the weekly pattern. And this pattern here, this is exactly what I've been talking about for a while here. Let me move that back up. Yeah, so these are pretty accurate, but this pattern is exactly what I've been talking about probably for a month. And what I've been talking about is this big ABC. So we had the big leg down. We've got what is likely to happen is we'll see a corrective wave. I'm just going to draw in some patterns. Maybe it ends up looking like this, where we decline. We get back to that 2650, 2645, which is 0.382 retracement of the entire pattern. And then maybe run back to 0.618, we fall short again, then we go down, and maybe we go down to the 0.23 level, or even there's actually a gap down here around 2400, and this pattern could unfold. This is a high probability that this pattern will unfold. And think about where we are, folks, as far as the patterns that we're watching, what we're watching in the economy. The uncertainty would tell you that we're going to be locked in some kind of range, and then ultimately a decision has to be made whether we're going this way or whether we're going down, and that decision won't be made from a technical standpoint for a while yet. It is May. We're looking at probably the end of August, depending on what kind of craziness happens from that. And don't forget, by the way, this is an election year. We still have to deal with that. Whether Trump wins, Biden wins, there's going to be, no matter how you look at it, if there's a change in the White House, then taxation is going to change. All kinds of things are going to change. So it's going to be interesting. Now, countries typically, especially when there's things that are chaotic like this, won't make major changes in the White House, but who knows? I mean, this is a situation that it's hard to tell and how to read. But whatever happens, if we get more taxes and different kinds of elements start to come out, it's going to change earnings projections and all that, because ultimately we have to have earnings for this market to work. There has to be an economy. Companies have to make money to exist. They can't just live off the Fed buying them. And, I've said the Fed 3 times. So, the Fed for the first time was buying ETFs on ETFs on corporate bonds. So maybe this is a test program for them to go Japanese and start buying ETFs on stocks. We'll have to see what plays out here, but maybe they're willing. I had a client of mine call one day and ask me a simple question: Do you think the Fed's willing to spend $36 trillion to save this thing? And my answer was, yeah, I think they'll do whatever it takes. So this pattern that I've got sketched out here, let me just clean this up real quick, is this pattern here where we get some kind of wide trading range and this zigzag where you get maybe you get this ABC and you get an X, ABC. This thing could go on for a while. Typically, they won't go on more than this ABC, and then the next rally, the decision will be made somewhere here. Like I said, this will probably be August. So we're going to see a lot of really good trading opportunities, folks, by the way. There's going to be, the move that we've seen so far. If you did manage to get short off of these numbers up there, that's fine. There's still a trade-off of here, and I'll be talking about that stuff as we go forward. Okay, so let's move on. So let's take a look, and let's just look at the 10-year notes real quick. They're back. It's interesting what's happening. You folks have been watching the channel a little bit. You start to understand these PPMs. This is a big spike in the PPM telling us that it has moved up almost to zero, still 0.69, which is still a negative, even though you can see it's curving here and starting to flatten out. This is telling us that if it goes above zero, it tells us that we will start to move toward the 21 period moving average, and we'll start to trade between the 10 and 21. We'll have to get above that 10 average, and that number right now on that 10 is that number on the 10 is 0.71. So it's not far from here. It'd be very easy to get above. And then with that 21 coming down, we could get sandwiched in. So why is that important? This is important because this is going to determine how the Fed's going to act, especially in the intermediate curve. Now, I'm a former institutional bond trader, and I also consulted quite a few of the large banks, their proprietary trading rooms for many years in a service that I had back in the 90s. And so what we talk about a lot is the spreads, the yield curve spreads, and some of the spreads that happen in these treasuries. And what we're seeing here is a fact, as we're seeing the steepening. You can see this chart here is showing that steepening of the yield curve. So that's been happening for a while, and so this is. I wouldn't call it a healthy sign. I would just tell you what it's telling us right now is that the Fed is willing to let the longer end of the yields stay much higher. They're only focused on the lower end of the yields. All right, so let's keep moving down the trail. Let's hit gold. I want to get through this so I can get through questions here. I try to do a half hour or so on this stuff. So gold. Really interesting market here. I've talked a lot in detail. Overall, this pattern is bullish, but these PPMs just aren't participating. We're seeing all of these in a very mixed mode. They're positive. PPM1 is at a 0.24, so it's right at a trend level. That's 1662, 1665. I mentioned this number in a lot of broadcasts that I've done over the last couple of weeks. That is your major support. If you see that number, grab it, because you might not see it again, as this is overall a bullish pattern. So if it was to dip down into below 1700, that would be, those are definitely buy opportunities. And this wedge that I'm sure everybody is talking about here is important to say the least. And everybody's watching it. The key breakout number I've talked about in detail is the 1737 number. We're seeing this thing move out. It's trying to move out of this range. Looking at the short-term dailies, you're seeing PPM1 is turning up, but it's flat. So it's really, we are stuck in a range here. We're not really we're stuck in this range. We're looking at 1677, 1737, and then there's some resistance up here at 1760. But I'm going to put on some Fibonacci projections. This is a proprietary tool that is built in, and let me just put that on real quick here, just so we can see. Now this is interesting because the short-term projections were just updated. Let me just back step just a little bit. Up at the top up here, so up here at the top, these levels right here, those were the former projections, which were suggesting just on a daily chart that we could go to around 1870 all the way up to 2100. Well, those got X'd out as this pattern's been unfolding that we've been watching. Now these new ones are 1834, 1811, and then 1774. So if we close above 1737, we're going to head to those next objectives. And depending on how this pattern sets up, then what that's going to show you is what's going to be next. And I'll just draw one more pattern, and we're going to go to Bitcoin next and start going on start talking about stuff. Hang on a second here. So this is the big pattern on gold that you should be watching. Is the next objective, even though these Fibonacci numbers have been negated because of this little downtick, they're actually still valid in the pattern, and this would be your next pattern that you're likely to see. So whatever's going on with this country right now, gold's still going to be in play. And I saw a comment somewhere that, if you want to see what the strength of the dollar is, it's not in the dollar, but by watching gold, or otherwise the weakness may be in the dollar relative to its purchasing power. So these are things that we're seeing that are starting to flow out in this market. All right, so let's go to Bitcoin. This is something that I'm going to show you a couple things here real quick. I'm going to put a trading model on here. This is a proprietary trading model, and what I want to show you here is that, move this out, at the last, there was a buy that came in at 67.86 was the last daily buy, and I just want to tie together everything I've been showing you, the Fibonacci projection tool, the PPMs, all this stuff that comes in. So this point was on 4/2 on April 2nd at 6,700. Got a buy signal here. This is daily, and I'm going to break it down to an hourly in a minute. It just got to sell at 87.15, so it made a couple grand on that trade. Now it's in a neutral phase right now, and I know we just I'm not following it to level. I know there's a split about to happen on it. It may have happened. That may have been the gap down that we saw. I know there's the miners are getting chopped in half. But the bottom line is this pattern is on a daily basis is reasonably bullish, but it's already completed that first leg of this trend. When we start to look at the weekly chart, you're going to see something very interesting. And I happen to be very bullish on Bitcoin. I think we could see print up into maybe 16,000. There could be a retest coming of the long-term highs on Bitcoin. Now, I don't have any reasons why. I don't know that there's a fundamental reason other than it's all technical. But this pattern that's unfolding here is a very bullish pattern. And, you know, there's this 10,400 number. What I want to show you here is there were three targets, 78, 55, 84. Let me take that back here. Can't read that. Second. So this pattern here is, here it is. 95.41 was the middle target, which has been penetrated, 10,500. We break above this Fibonacci 10,500 on this chart, and it will run to 12 to 14 nonstop. It'll be a quick run, to say the least. But the PPMs are turned up. We got PPM 1 at 1.44.92 on PPM 1 and 2, and these are pretty solid uptrends. The green line, which is the longest term trend line, is not up. We're going to have to stay above that level for at least, I would say, at least another 5 to 6 weeks, and you'll start to see it turn up. So we're going to have to maintain the above 8,300 for at least another 4 or 5 weeks. We stay above that, you're going to start to see this thing move up. Let's take a quick look at some really short term. Let's go to an hourly graph here. And so this thing has, there's not a lot of, I didn't bring up a lot of data here, but it does have a long trade that was signaled at 9,040. So this is a recent last 4 or 5 hours this trade is on. And so there is some upward momentum on a short-term basis trying to evolve here. I said that 10,500 level is going to be your key level on that chart. All right, so got a lot more to go. Let me let's hit some airlines, and then I'll be all questions here. I'm only going to spend a few minutes. We'll look at ALK. A lot of these airlines. Let me get over to a daily graph here. I haven't seen the solid triggers on these things. This is a shorter term model. In fact, let me do something else here. I'm going to bring up our quant software to go through this. This is actually my company's software. Let's just put ALK here, but I'm going to go into a daily model, and let me bring this up full screen. And a couple things that we'll look at here. This was the chart. It was trading. We have a thing called effectiveness rating, and that tells us that this is not a very great trading stock, but you do see it exited on the X right here, and then the big decline happened. Now this does have a short-term long on it, but this pattern's usually best on when you're looking at this. I put this on a 1.2 model. Let me put it on 3.2 because this is when those of you have been asking when a trigger is going to happen. This is the one. Now we did get a trigger just in the last couple of days on this one, and it's underwater today. They're under pressure again. We'll have to. A lot of this has to do with just this whole economy being shut down again. Let's take a look at UAL. So UAL has no trade. Last time it owned it was up here at 86 bucks. Doesn't own it. Been out of this symbol. So this is actually a really good trade. When this gets the next trigger on this model, this 3.2 daily, this is I'll let you folks know out there that this thing is coming online, and this next trade will be a good one. Typically after a big collapse in a stock like this, if there's a V bottom, if you're looking for a V bottom, we use our 1.2 model. For this other for a longer term and a more sustained rally, you want to use this model, and this will actually set it up. And so when this thing kicks in, I will let you folks know that happened. Uh, One of the stocks that I had touted a little bit, that at least from a pattern standpoint, that Hawaii Airlines was the best. This is a 3-2 holding. If I go over here and put it on a 1-2, what we'll see here is it's still got a long that came in on 414, and it's still hanging as long. We had a little spike here, for, but this pattern still is one of my favorite patterns, only because of the way that it's holding up over the moving averages. These are the PPMs down below that we talk about. We're looking at PPM 1 is down, but this bottom one, the 40, is telling us that those prices down around that 40 is going to hold. And so that's exactly what we're looking here. Like I said, I could go through a lot of these, but we're not going to be able to. We're not going to be, I guess, worrying about these stocks until they start to get triggered. Okay, let's go to some questions here. Yeah, so some guy says people acting like he has a magic ball predicting the future. I actually don't, but what I do have is a process, and it's quantitative based. And everything that I do on the channel, we manage billions of dollars in the markets with our software, the software you're seeing here, this Portfolio Expert platform. Uh, and over the past 20 years, we've managed $275 billion. So you don't do that by accident. You do it by having a process, and you do it by being very consistent at your decisions and what you're doing. So what you folks will see by watching this, I know a lot of you are uh, you know, uh, people that are involved in the markets maybe for a few years or longer, and learning. There's the things that I do that are programmed into software. I was the architect on this software and 3 other platforms, and literally some of this logic has run major proprietary bank rooms. Have been a big influence in those things. So by it's not about predicting. I don't predict anything. What I do is I find patterns like this one here, and when those patterns start to come in, I have an entire map of what the expectations are for these patterns. So we'll just go here for a minute. So there's this may be hard to see up in this because it's small, but every item in our database, every item in our quant environment, we actually talk about what the trade profile is. So what's the minimum days hold? What's the maximum? What's the percent gains? Those type of things. And there's even trend resistance lines, and everything comes out of the software. So we have a very highly sophisticated, we run 10 million calculations every day. So by the time I'm talking to you folks at night, we've already run our servers. We've got a pretty good idea what's going on. So on this particular symbol, it tells us exactly what our accuracy is. Total net profit, if you'd have done all the trades, is 331%. We have an ER ratio. We have the total trades done, winning trades versus losing. This is not a good, this is one that has this fair rating, by the way. So this is not one of the better trading models in here, but everything has a map. We know what our average win is 18%, our average loss is 7 when we lose. So it's got a win-loss ratio of 2.5, which means we make $2.52 for every dollar we lose. So it's about being consistent, not about predicting or any of that stuff. It's about being very consistent. And when you folks, listen, I was 28 once too, right? I started on Chicago Board of Trade at 28 years old. So, I started trading reasonably young and had a previous career. So I just want to show you that what's driving this type of Um, my comments, I always tell you, are data driven. Everything, I'm probably the most unique guy out there to a large that's talking. Everybody you see is drawing trend lines, talking about different types of stuff. I have almost 17,000 symbols, all utilizing the methodology that I mapped out over the last. Literally, this stuff was developed in the mid 80s and has been used on all types of institutional money over the years. So I have the experience of watching, monitoring these processes. I've had them in software since 1996. So I have that experience. So that's why I'm always talking about our database. Those are things I'm doing. Sorry to get so far down that rabbit hole there. Um, let's see here. Yeah, let's do Tesla. I said I'd do that. So we'll bring up Tesla daily. This is interesting. It didn't get out as well as I would like to see get out over here, but did get out. It was literally a buy on Tesla down here at uh, looks like 481 on Tesla. It's still long Tesla. This updates. His software updates every day. We'll go over to the live chart here in a second. But this is where the last signal came in. So this is where a trend. So when we get this little green arrow that says buy, what's happening is it's telling us that the probabilities for a sustainable trend is higher than the prices going down at that stage. It's worth taking the risk. Then we look at the map that I talked to you about just a minute ago. Now we look over here and we look at the map, and we can see exactly what we're expecting. The ER ratio is not as good on this. This is short term. These are short term models. I haven't delved into going in. We have short term models and we have intermediate models, and then on this platform we actually have secular models. So we have long term modeling capabilities where literally we might own a stock for 5 or 6 years and some of those. But for the most part, this is a short term is what I'm focusing on. Let's go over and let's go to a daily chart on TradeStation here, and then let's put Tesla in over here. So you can see this is that same trade I showed you here that came in. 516 was the actual price, 516.65 on 330 it bought. It's still hanging with this trade, but it's got a hair trigger on it. But the same kind of configurations, and I mentioned this, I think, last week in the live cast, is that the same type of configurations are in virtually all of these stocks, especially the ones that have moved, is that we had these upper end expectations. You can see my cursor up at the top here, where there's these big uh, projections coming out of the patterns, and then they got 5 or 6 days ago they got downgraded to this lower number. When that typically happens, that's usually when the market tops. You can see. Let me draw this in real quick, and I'll cover more details on this. But what you can see here, uh, we had these high-end projections over here, and then it got moderated to here. This is exactly where this topped out. We had these high-end projections up here, and then they got moderated, and now we're rolling over. We didn't even get to the 879 min that I was talking about. It did print that, looks like, about a week and a half ago. But now you're seeing the same pattern I've been talking about, the S&P, downsloping ppm 1 and 2, upsloping on ppm 3, which tells us that the target zone is going to be 643, maybe 675 to 643, and those are where this is where the pattern should go to. What's going to happen with this trade that's on the screen here, this trade right here, we close under the 21-day moving average. It's most likely will exit and look for another reentry. So that is that's what's going to happen here. So this pattern this will probably have a buy sell at 531 to 780 whatever. Um, we'll see how that plays out. But Tesla's mostly done on as far as the short-term pattern goes. But this is the way, like I said, the way everything looks like. All right, yeah, we got to do Apple, right? So Apple got a buy here at 258 on Apple on 326. It was interesting. It wasn't in on that final leg, so it was out of here. It actually sold out way over here on 131, and we saw from our database. I started seeing selling coming in on January 21st, the 31st. As we came into the 1st of February, our database was already liquidating, already giving us signs that things were rolling over. And that's the beauty of when you just look at an S&P index, you just look at indexes, you get kind of bought into this trend thing going on in the big indexes, and these indexes are being driven by 20, 30 stocks. And what I can see is the world of 17,000 symbols, and I start to see the rotation. That's why I'm always going to reference the database when I'm talking to you on the channel and those things, because I'm starting to see that rotation. So anyway, we came in here. Apple's in a much better position, and Tesla's got a hair trigger on exiting. This one has got major support right here at this 302 level. That's going to be pretty good support. PPM 1 is 0.61, PPM 2 0.31, and PPM 3.49. This thing's in a huge uptrend. We could trade down to 290, but it looks like this 300, 302 level should hold right in here. Start to see some firmness. If it breaks through, like I said, we'll go. If we get through 300, so if you were owning this thing, you probably put a stop just under 300. If we break under there, then you probably had maybe 290. 290 would probably be the extreme on this one. We are seeing the PPMs roll over though. So we've cut through first, second derivatives, PPM 1 and 2. It's a different, similar but different formation that we've seen on all of these others. Let's see here. Yeah, most let's see here. Got Ron Girl, NVIDIA. Let's take a look at it. Haven't looked at this in a while. Similar. This had a little later entry. We got a buy-in at right here at 261. In a very similar position as Apple in that it's pretty good, but we're seeing these downgrades. If you look up here, the Fibonacci patterns were suggesting we're going to go up, to much higher. Looking at moving up above 350, then that got moderated, and now it's moderated to 317, 332, 340, and then we're seeing some weakness, but these are general market weakness. These stocks like this, the PPMs on the left-hand side, plus 30.34, 0.40, 0.84 is a pretty robust trend. So there's going to be support on these here. If you own it from lower levels, pretty good. If you just bought it, be a little nervous on the downside. that key number is going to be around 294 on the major support on this one. But a lot of these stocks look this look the you know, a lot of these stocks look very similar here. I'm just kind of yeah, it's funny. I just see a comment here that very similar to Peter Ulides. Peter and I know each other long, long ago. We did some conferences together. Same with, I see somebody posting stuff about Larry Williams. Larry's older than me. He makes me look young. But we used to do conferences together, a bunch of us back in the late 80s, early 90s. We used to kind of tour around. So had dinner with those guys and know some of them better than others. Let's say, just kind of looking through some other issues here. We're winding down here. Yeah, so here's an interesting one. This is Shop. I guess this is Shopify, not being Jim Cramer, so I don't know all these, but yeah, this is actually really interesting. We had a couple trades since the craziness started, but the last trade came in. Last trade came in here. You'll see at 447 on this stock. It's been long since the 13th of April. This is a pretty robust trend. We're seeing some of these things start to see some of these things really hovering right along the 10-period moving average. If you own this thing, I would just use a 10-day moving, simple 10-day moving average as a stop loss. If it gets below that, you've done well if you've owned it for a while. Interesting enough, though, look at the projections that are up here. They're showing 926, 1052, and 1130, and these are Fibonacci patterns that are coming off of this this calculation. I am going to dig in. I'm gonna put something up here that I'm going to put two strategies on if I can find them real quick. Bear with me 1 second. Yeah, so I'm going to put two of these on. These are the pattern finders. And I just need to change one very quickly here. So these Fibonacci's that we're looking at are being calculated. This is part of the logic. This is a pattern finder logic that I developed way back in the 90s. And if we blow this up just a little bit so you can see this, there's two patterns. The red line is the larger pattern. The black line is the smaller pattern. So they tend to map out the highs and lows of significant patterns. So you can kind of see what's unfolding here. Now these projections I was just talking about at 926 are the level where we're actually seeing these projections come from. So this pattern recognition tool works hand in hand with the Fibonacci to help to define that. So part of the logic within the thought process of models and things of that sort are both probabilities, pattern recognition, these PPMs, momentum, and then ultimately the patterns and the underlying trends themselves and what is likely to happen. So that's what's going on. That's what I'm tracking on 17,000 symbols. So I know a lot of you guys watch other channels and stuff like that. Very few guys have actually developed their entire platform. We've literally invested millions of dollars over the years in the platforms that we build, and like I said, have run a substantial amount of money. So let me just see. This would be, yeah, some of this stuff. Let me just put up here. Yeah, the USO um, and the contango. Boy, I don't know if we'll save that for another time. But I'll just make a quick comment on the oil markets in general. Um, we are coming uh, into I think the next June expiration, I, I, and we may see another crazy market like we saw in the last expiration. These ETFs and ETNs on some of these commodities, folks, are just kind of crazy. Even the GLDs and some of those with gold, uh, they're very suspect, and they're uh, at risk of blowing up, sometimes for liquidity reasons and sometimes just for crazy discounts and premiums that can exist in these markets as well. So um, anyway, well, listen, folks, I really appreciate it. I think we had a pretty good crowd today, and we'll definitely continue to do these things. Like I said, my goal is to ultimately actually just focus on some educational stuff, and there's things that we're working on that you folks are going to be really excited that you met me. I really believe that. I'm not trying to put any ego. I've been doing this a long time, been successful in the markets and all that kind of stuff. So I'm looking forward. This is literally the first time I've engaged retail. I know that I've seen some names and things up here um, that are customers of ours and other folks, but we appreciate everybody. It's really been, this has been a lot of fun. I'm enjoying it, and most of you, if you're on the East Coast, I hit the sack at 3 or 4 in the morning your time. People have been asking me when I sleep. If you ever seen the movie Thank You for Smoking, Rob Lowe was asked that question, and his answer was on Sunday, and that's pretty much my answer. I love I love the markets. I love what I do. I've been doing this for a long time, and the passions never changed from the very first time I walked on the Chicago Board of Trade in 1979. The passions never went away. So I appreciate you folks, your comments and everything that you do. So have a great rest of your day trading. We'll talk to you tonight on the nightly commentary, and again next week. So keep the comments coming. Keep everything going, and we'll talk to you soon.